Seeds of Wisdom RV and Economic Updates Tuesday afternoon, the 12th of August 25. Listen to the full version on the official dinarreport.com blog and become our supporter on Patreon. Good afternoon. Dinar recaps. 91% of investors say U.S. stock market is overvalued, according to new Bank of America survey. A record high 91% of fund managers now believe the U.S. stock market is overvalued, according to the latest Bank of America, B of A, survey reported by Bloomberg. This marks the highest level of market overvaluation sentiment since 2001. Key findings from the survey. Record pessimism on U.S. equities. 91% of respondents think U.S. stocks are overpriced. Shift toward foreign markets. Investor allocations to overseas markets have reached their highest levels since February, signaling a sentiment shift away from U.S. equities. Bubble risk warning. B of A strategist Michael Hartnett cautions that the recent rally could turn into a bubble, as cash levels have fallen to 3.9% of total assets, a historical signal of an impending sell-off. Emerging market optimism. A net 49% see emerging market stocks as undervalued, the highest level of optimism since February 2024. Most crowded trades identified. Long positions in the Magnificent 7 tech stocks. Short the US dollar. Long gold. Top tail risks cited by investors. Trade war-induced recession. Persistent inflation preventing Federal Reserve rate cuts. Disorderly rise in bond yields. AI-driven equity bubble. US dollar debasement. Death of the US dollar has begun with BRICS rebellion, says forecaster. American trend forecaster Gerald Celente warns that the BRICS alliance is poised to put the US dollar on its deathbed, as member nations grow increasingly self-sufficient and independent from USD reliance. In a podcast interview with journalist Rick Sanchez, Celente highlighted that China and India now possess robust economies capable of thriving without the dollar. China dominates global manufacturing, supplying the US and Western nations with essential goods. Russia, despite sanctions, is expected to see GDP growth of 1.4% in FY 2024-25. India is increasingly self-sustained through domestic manufacturing and job creation, with only 2% of its GDP tied to trade with the United States. Celente emphasized that recent US tariffs on India, imposed by President Donald Trump, are unlikely to significantly impact India's economy. They're becoming more self-sustaining and self-sufficient. They're buying and making their own products, and the people are buying them there. That's what used to be in America, he said. A growing economic force, BRICS is now positioned as a collective financial powerhouse capable of shifting global market trends and policy directions. Should the bloc stop using the US dollar in trade, the resulting deficit could further weaken the currency. The world has had enough of the United States hegemony. The world is becoming fed up, Celente stated, noting that China, once lacking heavy industry and high-tech capabilities, is now a leader in both, including the production of electric vehicles. Once lacking heavy industry and high-tech capabilities, is now a leader in both, including the production of electric vehicles. Celente concludes that this self-sufficiency is accelerating the dollar's decline and solidifying BRICS' role in the next phase of global economic realignment. Listen to the full version on the official dinarreport.com blog and become our supporter on Patreon. Source: dinarrecaps.com